Hey guys, Akil Stokes here with Tier1Trading.com. Welcome back to another Trading Edge video. First and foremost, I want to wish you guys a very happy new year. Hope you took some time over the winter break to enjoy some time away from the markets, enjoy some time with family, but of course, enjoyed some time working on what you need to do to get your trading on track for the next year. Now, real quick, I have a podcast coming out on January 3rd, it looks like, sharing an interview with an aspiring trader who talks about wanting to be prepared for the next year, but not necessarily needing to start the next year. And I think that's very important, right? January 1 comes and we all have all these goals and we always feel like we can't start our goals until a certain date and we have to start our goals on a certain date. Remember that that's not the case, right? There's nothing that says you have to start trading on January 2nd. You want to start trading when you're ready to trade. So after your I's are dotted, after your T's are crossed, after you've accomplished everything on your checklist that you need to accomplish before you're supposed to start trading live, only then shall you trade live. So don't feel a need to rush it. There is literally no difference between starting on January 2nd versus starting on February 2nd. The calendar is just kind of a mental game we play with ourselves. But I wanted to come in and talk to you guys and follow up on the video I did last week, right? Last week I did a video on strategy development, telling you about some of the things I've been working on over the winter, some of the things that I've been backtesting, and wanted to give you an update on how that went and what changes I've made. So I'm still looking at the double Keltner band trading strategy, and I was testing it on the daily chart because, again, a daily strategy is something that is missing from my arsenal, and I would like to add it. And I went through about 12 different pairs, right? There's 21 pairs that I typically test. I went through about 12 different pairs and only found success on 3. And to add to that fact, the success that I found on 3, when you combine the totals and look at it as a portfolio, it was good, it was profitable, but it didn't reach the standards of what it would need to meet in order for me to trade it. So I made some adjustments and was kind of frustrated. Obviously, you spend a lot of time doing this work. You putting together ideas and tweaking and fixing and tweaking and fixing, and all of that to not have the results that you want was a little bit frustrating, and decided to play around on the lower time frames with an idea. I was playing around on the euro dollar lower time frames. And I started with the euro dollar because I absolutely hate that pair, right? Not a fan of that pair. Typically, it doesn't really work with any of the new stuff that I test. So figured I'd try it out on what historically has been a bad pair for me. And as I thought, right, first month of testing, completely horrible. Not horrible, I shouldn't say that, but it wasn't positive. I said, okay, here we go again. Didn't work on the higher time frames. Not going to work the way I wanted on the lower time frames either. And I was really quick to trashing it. And I decided, hey, you know what? Let's finish the job. Let's do a few more months. Let's see how it turns around. And I was pleasantly surprised. And I bring this point up because I've been talking to a few traders over the break about, they've been asking me the question. I did a little YouTube shorts thing on kind of like building a portfolio and how different pairs play different roles in your trading portfolio. How not, your most profitable pair isn't necessarily your best pair, depending on the risk taken to achieve that profit. So I got a few questions about, hey, Akil, what pair should I test for this strategy? What pair should I test for that strategy? You said different pairs have different personalities. And I'm like, I don't know. Test them all. And the honest truth is you have to, you don't know what pairs have what personalities fit your trading style or your trading strategy until you actually test it and get those repetitions and start to see. So I always advise you give each pair the time of day and let the numbers speak for themselves. So, and that's one of the reasons I decided not to skip over to euro dollar, which I assumed was going to be a loser. And I went back to looking at it and pleasantly surprised. So I just wrapped up my first year of testing on it. Got about, let me just pull up my deal real quick for you. Took about 126 trades. Rules are still not 100% there. There's a few little gray areas that I need to clear up. I found a little funky type of situations in the market that I need to put in rules for. But about 95% there. The main rules for the strategy, entries, exits, targets, those are all established. Again, entries are a little bit, there's a few situations I need to kind of clean up, but 95% complete what I think the trading strategy is going to be. And after 126 trades, pretty decent results. Now, here's the thing about testing day trading instead of testing swing trading. So when I'm testing on the daily chart, right, it's one a day. So you're testing every single day, even with swing trading, right? My swing trading trades are taken around the clock. So whatever time the signal is completed, unless I'm asleep, obviously, and it's something that I can't put on in advance overnight, I'm taking a trade. Day trading is a little bit different. So when I say I tested 126 trades, right, I'm not testing on the lower time frames, the 15-minute chart. In this example, I'm not testing from 12 to 12, right? Because realistically, I'm not going to be trading 24 hours a day. There's nothing wrong if you want to do that. More reps in the market are good for your eyes. More data is good for, breaking down and grouping things later. But understand, if you're going to be a day trader, you kind of have to have an idea of what is realistic. So what I did was I tested Monday through Friday, and I tested 6 a.m. in the morning to 10 p.m. or 10 a.m. Excuse me, not 10 p.m. That'd be crazy. 10 a.m., 6 a.m. in the morning till 10 a.m. looking for those signals, because that would be a time that I'm comfortable in trading. Can I wake up 5 o'clock and take trades? Yes. Do I want to? No, right? I'm always going to put my lifestyle first. And that may change depending on where you're at, right? As a younger trader, right, before I had a family, before I was actually making profit in the market, if you would have asked me when would I be willing to trade, I would say anytime that the money's being made. If it meant staying up, 2 o'clock in the morning to take signals to make profit, I would do it. But things change, right? That urgency is different. I'm an established trader at this point. I don't need to force things. Freedom of time and my lifestyle choices and maintaining the lifestyle that I want are more important than putting myself under unnecessary stress. So I'm not saying that you have to do one or the other. There are people out there, whenever the money's being made, I got to be in the market. Hey, nothing wrong with having that mentality. Just where I'm at right now in my life, I've allowed myself the opportunity to be picky enough about when I want to trade. So I don't want to trade 5 o'clock in the morning, because that means I got to wake up 4:30 or 4 o'clock to prep, and my mind's all blurry, right? So 6 o'clock was the earliest that I was comfortable starting my day trading day. 10 o'clock is the latest that I'm comfortable ending, because again, I like to do other things with my life. I have other things that I want to do. I don't want to be a slave to my computer all throughout the afternoon. Usually after 10 is when 10:30 is when the stuff starts to kind of die down in the market anyway. So I tested that entire blanket. But what I'm going to end up doing is going through different times, right? We have the tier 1 trading spreadsheet where you can kind of group them by times, day of the week, all that fun stuff, and see if there are any tendencies. Are there any tendencies and signals that come between 6 and 7, or 7 and 8, or 8 and 9, right? For example, I've tested strategies before in the past where signals between 6 o'clock and 8 o'clock were great. Between 8 o'clock and 9 o'clock were horrible, right? No surprise, that's when a lot of news comes out. So you may want to filter that out. I've tested strategies in the past where Mondays are not really worth it. Fridays are horrible. So I concentrated on Tuesday, Wednesday, Thursdays, middle of the week. For me personally, right, I would love to take Mondays out of the equation, because Mondays is when we do our private Q&A sessions here at Tier 1 Trading. So it's going to be very difficult for me to actively day trade while doing those Q&A sessions. And those Q&A sessions are very important to myself, very important to our community. So I would prefer not to trade Monday. Friday is the same thing. Friday morning, I have some obligations. My wife goes into her business meeting. I take my kids to work. Friday is typically what I dedicate as kind of an off day from trading, but really a business development day where I work on the business side of things. I would prefer not to trade Friday. I also like having a day off. I like to sleep in on Friday. So those are things that I'm going to look at once I crunch the numbers and see that, hey, can I eliminate those 2 days and still reach the same profitability that I had throughout the week? Or are Mondays the greatest day ever, or are Fridays the greatest day ever? And if so, then I may need to make some adjustments. But the process of back testing is a little bit different on the lower time frames, when everything is kind of time slotted, time based, versus the higher time frames where it's just test everything. And if you're someone that knows your schedule, if you know your style, you can save a lot of time by only back testing those specific periods of time versus back testing a full 24 hours, especially if you know there is no chance that you can trade during that time period. So I got one pair done. I still got to do another year. I'm going to do 2 years here, try to get about 200, 300 trades total to give myself a good enough sample size. I know that's crazy to a lot of you, but I got one pair done on a pair that I thought would be the worst, and it ended up pretty good. Quality profit factor, win percentage is right at my borderline, about 41%. Anything below 40 is when I start getting a little nervous. So right at my borderline, and there's no significant kind of massive losing streaks or drawdowns in there month to month. So who knows? I'll do that. I'll test another pair. We're going to continue to refine this strategy. Tier 1 members, if you want, on Monday, we can go into the QA session. I can break it down and show you exactly what I'm looking at, and we can start putting together kind of mastermind groups so I can give you guys the rules and we can start looking at it together, and that way we can find any gaps or holes and flaws and compare kind of numbers. There's a good podcast coming out about that as well. But want to keep you guys updated on the progress and want to keep you guys updated on what we're working on for the new year. So once again, Happy New Year's to you guys. I hope you have some trading goals. I hope you get to work on accomplishing those trading goals. Remember, you do not need to start January 2nd. Start when you're ready, right? Start when you have all the boxes checked and not a second before that. Again, think about it from this perspective. Is there any legit reason to start on January 2nd? Is it going to make any difference starting on January 2nd versus starting on March 2nd? If anything, starting later is going to put you in a better situation because you have a better grasp on what you're doing. You have more experience, you have more practice, which lessens your likelihood of losing money in the market. And trust me, every year I see it. Every year I speak to traders who are all gung-ho, they're excited. I'm getting started in January, let's go. Just like people that go to the gym, and guess what? 2 weeks later, 3 weeks later, accounts are blown. 3 weeks later in the gym, all those people don't show up anymore. So don't be one of those people that gets out to don't be a Leroy Jenkins, right? Don't be a Leroy Jenkins who runs off into the heart of battle and Leroy Jenkins and then gets destroyed. I'll see if I can put in a clip of that to make it make sense if you don't know. But take your time, plan ahead, get started when you're ready. And if you need any help, as always, we're here for you. You can head over to tier1trading.com, check out the 14-day risk-free trial membership. There's no auto bill or anything like that. Get on the platform, take some courses, join some live sessions, speak with the community, speak with the coaches, of course. Or if not, you can always reach out to us on social media. I'm on Instagram, I'm on Twitter, I'm on TikTok, I'm here on YouTube. You can leave comments below. However you get a chance to reach out, please reach out. We don't bite. We love helping traders. We're not going to try to sell you any courses or anything like that. We're just going to give you the answers to what you're looking for. All right. Until next time, plan your trade your plan. Happy New Year.